Good afternoon. This is Campbell McCrary, Amvest Capital in New York. Welcome to the Amvest Capital Inc. live webinar with Panoro Minerals Ltd. Panoro trades on the venture as PML, Papa Mike Lima, and as POROF, Papa Oscar Rio Oscar Foxtrot on the OTC. In Peru, it trades as PZN, Papa Zebra Nevada. I hope you enjoyed today's program. It'll also be available in replay mode. Feel free to chat in your questions in the go-to. In fact, we'd really love if you did it. So we encourage you to. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. This call is most definitely for informational purposes only. So we have with us today Luke Shaheen is the president, CEO, and director. So making you presenter, Luke, and if you want to pull up your presentation, get that going. Luke's a professional engineer with more than 30 years of experience in the mining sector. Has completed over $700 million in financings, including precious metals streaming, JVs, asset sales, royalties, and public and private offerings of equity, and all of this leading to the continued growth and success of Panoro and its resource base. With that, again, following the presentation, we'll be queuing you for feedback, and we'd love to hear what you think. And again, if you want to get the replay, it'll be available about an hour after the event. You can get it at amvestcapital.com/webinars. And Luke, if you want to share your video, we can see you as well.
All right, there we go.
Yeah. So I see your slides and your calendar. So there we go.
Yeah.
Take it away. Thank you. I'll see you on the other side.
All right. Thank you, Campbell. Thank you, everybody. I'm going to try and take you fairly quickly through our corporate presentation. It's all available at our website, but I'm going to try and hit the high points and try and focus on a few of the developments that have occurred over the last few months. Just as a reminder and summary for some who might be new to the story, Panoro Minerals is a copper exploration company. We're focused on advancing our portfolio of projects in Peru, primarily, well, exclusively in Southern Peru. Our main focus is the Cotabambas Copper Gold Silver Project, where we have a very large resource economic assessment completed. We have a very important strategic financing streaming agreement with Wheaton Precious Metals. And since the PEA, we've identified a number of resource expansion potential. 70–80% of our investment has gone into Cotabambas, will continue to go into Cotabambas, and our objective is to advance the project to bankable feasibility. The other projects that you see on the list there, Antilla, Cusiorco, Huma Matata, and Cochasaiwas, are second projects of, let's say, secondary priority for us. Antilla has seen a fair bit of investment over the last decade or so, where we have a moderate-sized resource economic assessment completed, identified some metallurgical improvements to the project, and it's also ready to move into feasibility. The Cusiorco project we've sold to Hudbay, where we have some milestone cash payments coming to us and also a royalty in the future. I will also point out that Hudbay is one of our largest shareholders. They own just under 12% of our stock. The fourth project, Huma Matata, is joint ventured with JOGMEC, which is the Japanese oil and gas mineral exploration company, the company that goes out and looks for exploration assets that would be of interest and earns into them, and then sells that interest to one of the large Japanese mining houses like Mitsubishi, Marubeni, etc. So they're earning in a 60% interest on that project, and we expect to be drilling at Huma Matata later this month. The Cochasaiwas project is a small former underground gold and silver mine that we have sold to a Peruvian partner, Mintania, where we have some scheduled cash payments coming and also, importantly, a 5% royalty into the future. So you can see from our strategy here that we have brought in strategic partners at most of our key projects. Our focus has been to advance the Cotabambas project along the road to bankable feasibility while minimizing or avoiding dilution, share capital dilution as much as possible. With the deals that we have completed to date that I just summarized with you, the company has arranged for 25.4 million Canadian dollars to come in over the next 4 years from the different sources that I just mentioned. That's a very important note for us because that 25.4 million comes in without the issuance of any stock. So that is good secure cash flow coming in to continue advancing the Cotabambas project. We are trading at a $50 million market cap. I will get through a few technical summaries of the Cotabambas project before I lay out to you a scenario as to how undervalued we are and what is changing to bridge that valuation gap. Our projects are located in south central Peru, and if you take a look at this slide a little bit later, you'll notice companies on this slide from China, from Japan, from Mexico, from Peru, from Canada, from the US, from the UK, companies from all over, large multinational mining corporations heavily invested into the southern part of the country. And during the last copper bull market in 2011, the 3 advanced staged projects that existed in this area at that point were acquired. At that point, we had only started drilling our Cotabambas project. And now Cotabambas is the only advanced stage project in this region that's owned by a junior mining company. So we think we're headed into an environment that should be very conducive to strong valuations and interest in investment interest into Cotabambas to move it through bankable feasibility and beyond. I won't dwell too much on the technical side. I see from the list of people who are attending that that's primarily investor focused, not so technical focused, but suffice to say that the Cotabambas project has had a lot of work done on it, 85,000 meters of drilling, the result of which is 722 million tons of resource. The economic assessment on the project has identified a $683 million net present value of a project that will produce 70,000 tons a year of copper plus 95,000 ounces of gold and 1 million ounces of silver, all in a single concentrate. Now, I'd like to emphasize one thing, that these values that you see on this slide, particularly the net present value of $683 million, that's based on $3 copper and $1,250 gold. I'll show you in a second what happens when you use current prices. The Cotabambas project also will produce a clean concentrate, no arsenic, at a low cash cost, and it will be a high value concentrate with 27% copper and 11 grams per ton of gold, 134 grams a ton of silver. But now, importantly, let's turn to what's coming with the Cotabambas project. With the Cotabambas project, after the PEA, we have done an important amount of resource growth drilling and have identified the potential for additional resource, both oxide and sulfide from Maria Jose, additional oxide from Petra David, and as of the drilling in 2019, have identified a new skarn, high-grade skarn deposit at the zone that we call Chaupec. So there will be more resource coming to the project. Currently 722 million tons. There's no reason to think that the resource will not grow to something north of 1 billion tons. Secondly, the metallurgy. The flotation testing has identified, that was included in the PEA, has identified upside recovery potential from both the mixed and oxide zones that are included in the mine plan or included in the feed to the mill. So there's already a flotation recovery upside identified that will be clarified through some additional met testing. As I mentioned, the resource growth has identified more oxides from the drilling work. That means that there will be a heap leach component added to the project. That will not only add more copper production, but it will add more low-cost copper production. And moreover, it will add a lower capital cost startup to the Cotabambas project. So in addition to the resource, the metallurgy, and in addition to the metallurgy, the other upside, of course, is the commodity price. Current commodity prices are between 35 and 40% higher than the prices that were used in the preliminary economic assessment. The skarn zone is quite large. We've traced it along 1 kilometer. We've drilled 5 holes, tracing it at depth along 1 kilometer. The geophysics has identified a very large, a very high and large chargeability anomaly underneath the area that we've drilled. Corresponding with that is a high magnetic response over and above, over top of the high chargeability. All of it indicating the potential for large porphyry and skarn mineralization a little bit below the areas that we have drilled. So we are planning later this year to expand the drilling program there to further delineate that skarn zone. Now, the heap leach component. We have currently 99.6 million tons of oxides within the resource. Some of these oxides have high gold grades. So that material will be sent to the plant blended with the sulfides. There will be a smaller component that is low in gold grade that could have been destined for a heap leach, but we didn't have enough tons when we did the PEA. But the additional drilling has identified more oxides, which will, we estimate, provide some 50 to 80 million tons of oxides for a new heap leach component to the project, which, as I mentioned, will add more copper production, more low-cost copper production, and reduce the initial capital cost for the project. Now, the impact of commodity prices, if you take the PEA cash flow model and you plug in the commodity prices of March 10th, you'll see that the net present value of the project increases from 683, almost triples to almost $2 billion. So there's almost a 200% increase in the value of the project based on the movement in commodity price. The rate of return over 30%, and the payback period is just about 2 years now. And the life of mine cash cost is under $1 at 82 cents. In January, Deutsche Bank's Copper Outlook report identified the need to build new copper mines and the shortage of new copper projects, and identified 11 key copper projects to feed this shortage of new the development alternatives for new copper projects. And Cotabambas is included as one of the 11 projects that is likely to feed a mergers and acquisition space that is now just recently developing. The Cotabambas project also, as I mentioned earlier, if you look at the bottom slide, not only does it have a cash cost of only 82 cents, that's the life of mine cash cost, but the cash cost plus the sustaining capital still is below $1, and that puts Cotabambas in the lower quartile of worldwide production. So Cotabambas will be a low-cost producer of high-quality concentrate. You can see the Cotabambas project will, over the first decade of the mine, will be mined at a 0.68% copper equivalent, so relatively high grade compared to the peer group. Also, a life of first 10-year cash cost of only 59 cents. I'll also point to you on the top left-hand chart, you can see the grade of the mine in the first 3 years of operation is about 0.8% copper equivalent in the first 3 years. That's why the mine pays itself back fairly quickly. The Antilla project is a smaller project. It's about 400 million tons, of which 200 million tons is leachable. The PEA on the project has identified a leaching project, low capital cost, good payback, very low strip ratio. We've identified additional recovery potential from Antilla, and the impact of commodity price is to almost double the value of the project from the metrics that were estimated in the PEA. The increased recoveries have identified the potential to increase the rate of mining at the Antilla project, which has again the corresponding increase in valuation. And the project is primarily, the mine plan is primarily at indicated category. There's not much drilling left to do. It's a project that's ready to be fast-tracked to bankable feasibility. Now, we at Panoro Minerals, we are trading at below the average of our peer group. In terms of the amount of money that we've invested, we're trading at 1/3 to 1/4 of the average of our peer group. And in terms of the amount of copper that we have identified, again, we're trading at about 1/3 to 1/4 of the average of our peer group. And our plan to bridge this valuation gap is to complete a strategic financing that will fund the Cotabambas project all the way through to bankable feasibility without the issuance of any more shares, eliminating the risk of dilution, and to realize the built-in value of the Cotabambas project. We think the best roadmap forward is to move towards bankable feasibility, make the project more developable at a lower capital cost. And I will present to you this slide here, which is a recent transaction. As I said, I believe the merger and acquisition market is just getting moving in the copper space. And in that space, projects like Cotabambas will start to attract a fairer valuation. GT Gold on about 3 weeks ago sold their project in Peru. Their project is very similar to Cotabambas. The project has about 14% more tonnage, but has between 8 and 20% lower grade. The net result is that the contained copper at Cotabambas is about 95% of the contained copper at GT Gold's asset. Plus, Cotabambas has resources all open pittable. It does not need to be mined via underground. And the PEA is already complete on Cotabambas. But, so what I'll present to you is that the GT Gold transaction was completed at $456 million. And the Cotabambas project, based on our market cap right now, we're valued at about $56 million. So probably only approximately 1/7 to 1/8 of where it should be. Now, this transaction in conjunction with the previous slides that I showed you is my argument to why we think the Cotabambas project and Panoro Minerals is undervalued. Our plan to unlock that value is to seek out a strategic partnership that will include one of three alternatives. One is to sell the Antilla project and use the capital from that transaction to fund Cotabambas. A second would be to expand the stream at the Cotabambas project and to fund the feasibility. A third alternative would be to joint venture the Cotabambas project. Our priority is on the Antilla alternative. And once we have completed this strategic financing, we will follow that up with a spin out of all of the other assets that we have within our company. We have, as I showed you earlier, accumulated some royalties on assets that we have transacted on already. We think that we can spin those out into a separate standalone company and then distribute the stock of that company to our shareholders. Moreover, our other earlier stage assets really belong in a company on their own because they're pure exploration vehicles, one of which, Humamantata, is already partnered. We will spin that out and distribute stock to our shareholders as well. So these are some major objectives that we plan on executing during the course of this year. The first step is to complete the Cotabambas strategic financing to bankable feasibility. We're hopeful that that's within the next few months, and then we'll follow that up with the spin-outs. So I've tried to focus here on the nature of our projects and our strategic plan forward. Just as a quick summary, though, the work on the ground that's coming up is I've mentioned the Cotabambas project. We have some drilling planned at the Chowpec target to further delineate the skarn. We have some metallurgical testing program coming up to refine the recoveries from the transition zone and to estimate potential recoveries from the oxide zone. Then at the Humamantata project, as you've probably been seeing from our press releases, we've completed a geophysical mappings program, and we expect this month to start a drilling program. So we are not just undervalued. We have a decent amount of cash already coming in. We have some important strategic plans to execute on over the next few months and during this year. And we have some important work in the field coming up as well at both Cotabambas and Humamantata. So that's Panoro Minerals. We're set up. All of our management team, key management team, is in Peru. All of our expertise, geologic, community relations, environmental, is all in Peru. 3 of our directors are Peruvian, and we think that we're a unique opportunity for investors to get exposure to the copper space, where I'm sure many of you have seen copper has moved in price fairly quickly. For those of you who might be interested in the history, recent history, if you look back over the last 17 years of copper price, you will note 2 big peaks in the copper investment space in 2007 and 2011. Both of those occurred some 9 months to 12 months after copper price moved past the 350 per pound price. And we are right now about 3 months into that phase. So it's a very good market emerging, and in this market, we think that all the work that we've done over the last decade has positioned us not just very well, but I think very uniquely to provide value to our investors. So that's my presentation. I understand now we're open for questions.
Yeah, thanks for your presentation, Luke. And just, I guess, on following on from the notes from your comments on the M&A, we've seen quite a bit in the gold space, and separate to the GT Gold transaction, are there any other copper deals you've seen come out? I mean, there's been the Sol Gold back and forth in the news, but
no, I mean, comparable to GT Gold, no. And I think, remember, GT Gold, actually, it's a bit of a misnomer. GT Gold, their asset is 54% copper and 46% precious metals, gold and silver. Cotabambas is about 70% copper, and the balance is precious metals. We have started to see other financings, public market financings, and including strategics investing into exploration development stories. So the early signs are all very good. And I think if you look back to 2011 and 2007, you'll find exactly the same early signs.
Yeah, great. And then on the timeline, you mentioned the sequence of events, the bankable feasibility study, spinouts, etc. Someone just asked if you could, touch on those again and discuss some of those near-term catalysts.
Yeah, near-term catalysts, as I mentioned, the work on the ground is the drilling work at the Humamantata project to start. Then following that, drilling work at the Cotabambas project to commence at the Chowpec target. And then parallel with that, the metallurgical test work at the Cotabambas project. In parallel with those works on the ground, we will, over the next 2 or 3 months, plan to, over the next 2 or 3 months, complete the strategic financing to fund the Cotabambas feasibility. Once that's complete, then we will commence with additional drilling work at Cotabambas to drill out the satellites that we've identified, and commence with the infill drilling program. Subsequent to that, and before the end of the year, our corporate activity will include the spinouts of the royalty and the exploration groups that I've mentioned.
Yeah, that'll be exciting. And then back to Cotabambas, the resource upgrade. How much will you be needing to drill to increase it from a third to indicated, and if you could discuss on some of the exploration targets you have there.
Yeah, the current 722 million ton resource is approximately 20% indicated and 80% inferred. So there's a significant amount of infill drilling required to upgrade the resource to indicated and measured. So we have estimated in the order of $30 million to complete the infill drilling program. So our estimate of the completion of a bankable feasibility study at Cotabambas is in the order of $50 million, most of which is the infill drilling program. Now, in addition to that infill drilling program, we have estimated some $10 million to complete the drill out of the satellites. That includes the oxides at Petra David, the sulfides at Maria Jose, and skarn at Chowpec. Now, there is one caveat. The skarn at Chowpec could be quite large. It could be much larger than what we've delineated so far. We will test that, and if that turns out to be the case, we will focus more drilling at the skarn deposit because the grades there are quite high. There are grades at over 1% copper, and the geologic environment of the Chowpec skarn, the style of mineralization, the structural setting, all of it is very comparable to the Ferrobamba open pit, which is part of the Las Bambas project, which is really the driver of that $7 billion project. So we think that there's potential that our Chowpec zone could be comparable. And if in fact that becomes evident through our drilling work, then we will focus more drilling on Chowpec. That could be a project changing resource.
Yeah, okay. The total budget to complete the BFS would be 50 million there.
50, correct.
50, yeah. And then that's covered, and if you could remind everyone on the agreement with Wheaton and who covers what? Right.
Well, the Wheaton agreement provides us about $1.5 million US a year. So that Wheaton agreement really is meant to cover all of our overhead operating costs. But we have additional money coming in from some milestone payments that are due from Hudbay, some scheduled payments that are due from Mintania, plus the I mean, that's the money that's coming in. We do not have all of the $50 million that we need. We estimate that we have approximately 15 million of what we need for the Cotabambas work. The balance we will get from the completion of this strategic financing that we have planned.
That makes sense. And then, separate to growth in the oxide potential there, what would be left in terms of optimizing project economics?
At Cotabambas, the other optimization work is the recoveries from the transition zone. So there's some metallurgical testing to be done there. What we would expect is as the resource gets upgraded into measured and indicated, we will then optimize the mine plan to ensure that we are accessing the highest grade, the areas that are near surface early in the mine life. which you see on one of the earlier charts. We have fairly high grades in the first few years. But as the resource gets upgraded, we'll then re-optimize that mine plan. The other part of the optimization will depend on how many tons of high-grade skarn we are able to delineate from Chowpech.
Mm-hmm.
If we have in the order of, let's say, 50 to 100 million tons from Chowpech, then that will be fairly easy. The optimization will be an additional 3 years of high grade into the front end of the mine plan. If the Chowpech skarn proves to be something greater than 100 million tons, then the optimization might include changing the mine plan so that the first few years of mining are all solely from the Chowpech target, which might indicate that it's better to move the plant site location.
Yep. Okay. Yep. And then the marketability of the copper concentrate, both projects, or if you could.
Yeah. Yeah. I mean, sorry. Yeah. That. We there, of course, with the bankable feasibility and the intermediate likely pre-feasibility study, there'll be significantly more met testing work done, and we'll commence, looking at do some marketing studies on the concentrate. But all indications are that because of its high value with the gold and silver byproduct, and the lack of arsenic, that it's going to be a highly sought after concentrate. But that work needs to be will be further advanced, of course, during feasibility work.
Understood. Thanks for that. I'll pass to Artie.
Thank you. Can you please remind us how many projects you have and how many of them you are working with a strategic partner?
Yes, there's a slide. You can see the 5 early stage exploration projects: Humamantata, Promesa, Año, Sancapampa, and Morosaiwas. Of those, Humamantata is partnered with JOGMEC. Then the Cotabambas and Antilla projects, we don't have a development partner identified for them yet, but of course at Cotabambas we have a financing partnership with Wheaton Precious Metals. Then on the royalty side, you can see 2 of the projects: Cochasaiwas, which has been sold to a Peruvian group, Mintania, where we have a royalty, and the Cosiorco project, which has been sold to Hudbay, where we also own a 2% royalty. So Cochasaiwas, Cosiorco, and Humamantata are either sold or joint ventured, so that Panoro will own either a minority stake or a royalty. And at the Cotabambas project, we have a streaming agreement with Wheaton Precious Metals. And overall, just remember that 2 of our largest shareholders are Hudbay Minerals and Antofagasta Minerals of Chile.
Do you think it's likely we can see another partnership in your portfolio in the future?
Well, as I mentioned, the strategic financing ideas that we are advancing to fund Cotabambas bankable feasibility, one of them includes an alternative to joint venture the Cotabambas project. It's not our first priority, but it is on our radar. So the simple answer to your question is yes.
And for the Humamantata project, what geophysical surveys are telling to you, and what can we expect in the next 12 months?
Yeah, the geophysical surveys combined with the surface geologic mapping
combined with the geochemical results and combined with the structural mapping, have indicated, have identified three things. One thing is a porphyry at surface near the northern end of the property. Second is porphyry outcropping at or near surface near the middle of the property. In between those two porphyries, we have a number of mineralized breccia pipes. And in the vicinity, a number, I think, 10 or more breccia pipes that we've identified. And also in the vicinity of the clustering of these breccia pipes, we have mapped at surface skarn mineralization, all of which indicating that we have a large area over which there's significant mineralization from the north to the central part of the project. And so our exploration program there is currently planned in a number of phases. The first phase will be drilling at or near or around the porphyry that we've identified to the north, and then moving further to the south, targeting the area of the breccia pipes, or at least a couple of the large breccia pipes that we, I mean, they're large in size by what we see at surface and what the geophysics has correlated. So that's the first round. The first sort of phase of drilling is starting in the north with the porphyry, and then moving further south. And then based on the drilling results, we'll refine subsequent follow-up drilling.
Thank you. Stuart?
And also on Antilla, the slide, you have the comparison of the PEA estimates. So slide 19, yeah. So that the spot price impacts, that's at $3.63 per pound copper. Right. Someone asked, what would it look like at $4 copper?
It would look
MPV
higher.
And the MPV and the IRR.
Yeah. Yeah, I mean, you're probably saying why 363? Well, that happened to be the price on the day that I updated this slide. Well, if you add another 10% to the copper price, you will see, the net present value of the project will surely be above $600 million, and
yep.
An IRR north of 40%. So I think the project already at the 363 price level, at or approaching a 40% rate of return, is already a very sparkling project. There's only one drawback to the Antilla project, which is its scale. It's not huge. Yeah. I mean, that's the bad news for the Antilla project, but the good news for the Antilla project is that it's not huge. So it's kind of a good news, bad news. But we think that there's a number of potential partnerships that could fit with the Antilla project for a partner to develop this asset. We want to remain focused on the Cotabambas project because of the following. I believe that the Cotabambas project at bankable feasibility will look something like a $2 billion net present value. A $2 billion net present value coming from higher commodity price, the addition of oxides, the addition of high grades, and the improved recoveries from the transition zone. So a $2 billion net present value at bankable feasibility would give me a target of a multiple of 0.5. Target multiple of 0.5 on $2 billion is $1 billion. That's what the Cotabambas project could be worth at bankable feasibility. $1 billion is, in round easy number terms, is 1.3 billion Canadian dollars. We think that we can get to that point without issuing any new stock. $1.3 billion at 280 million shares outstanding is pretty close to $5 a share. That is the net asset valuation potential for the Cotabambas project at bankable feasibility. And that's why we do whatever it takes to fund Cotabambas to bankable feasibility and get it to bankable feasibility with a heap leach component project, which allows the project to be developable, not with just with the only alternative being a $1.5 billion upfront cost, but with the heap leach perhaps as low as $300 million upfront cost. So the Cotabambas project is a big prize that we need to expedite.
Yeah, definitely with those numbers. And still talking about Antilla, but someone asked if, at high copper prices, do you see the mine life extending as you might mine lower grade ore and, change the mine plan?
Yeah, actually, that's a good point because the metrics that I showed you earlier at a higher copper price, that assumes the same mine plan. It doesn't look at what additional resource might be mineable with the higher copper price. So there is some upside to increase the tonnage, but I would say at the Antilla project currently, if you look at the resource, there's 168 million tons of supergene at indicated and 25 at inferred. So that's almost 200 million tons. Of that 200 million, 120 is included in the mine plan. So there could be another 80 million tons based on the current resource that gets rolled into the mine plan. Moreover, there is what we call the West Block, and at the West Block we have similar mineralization outcropped at surface and a few drill holes through it. So there might be another 50 million tons there. Plus, if you look at this cross section, you can see the resource goes to the top of the hill. Well, on the other side of the hill, the similar mineralization is outcropping. So this blanket of mineralization could extend underneath the top of the hill and to the other side. So yes, there is there's potential for additional chalcocite that would feed the proposed heap leach project.
Yeah. And what work could be done, or would you be planning to do on like the operating costs? Have you looked at contract mining? Do you think you can bring the costs down?
As far as the capital cost goes at Antilla, we've already included the provision for a contract miner. So we have slightly higher operating costs because of that, but have reduced the initial capital cost. So I think that part of the considerations for Antilla is already incorporated. Of course, that I think will be revisited as the project moves through feasibility.
Okay, and then just one last question on Antilla before we move back to Cotabambas. The recovery rates at Antilla, they improved when you compared the older rate. Just if you comment on what helped increase recovery.
Sorry, at Antilla?
Yeah, at Antilla.
Okay, right. The recoveries included in the PEA, 72.5%, were based on bottle roll tests. So for those who aren't familiar with bottle roll tests, you take some of your sample, you grind it up, you put it in a flask, you add some acid, you roll it around, then you siphon out the acid and you measure how much copper you've recovered. You know the grade of the copper of the sample that you put in, and so how much total copper is contained in that sample, and you measure how much total copper comes out of the leachate, and that gives you a recovery. That's a good test for a PEA. Subsequent to the PEA, we did column testing, where you take a much larger sample and you put it in a large column, and then you apply acid to the top of the column, and you measure and you extract the leachate coming out the bottom and measure their recoveries. In those column tests, you're better able to control the rate of application of the acid as you monitor the recovery, and you're able to optimize the acid application rates in order to optimize recoveries. So that's what was done with the column testing, and through the optimization of the acid application rates, we were able to optimize the recoveries to 79.9%.
Thanks for that. At Cotabambas, someone asked if you've run CSAMT, or controlled source audio frequency magnetics geophysical program at the project to help identify the potential for high grade and the size of the skarn.
We have not. The geophysics that we've done has been IP or mag. Yeah, so I mean that's what's been done to date.
Yeah, no problems. And if just could rank the grade of the ore body at Cotabambas with other similar projects.
Yeah, the Cotabambas grade is slightly above average. It doesn't stand out from grade. It's not low grade, but I mean, if you talk about the overall life of mine grade, it's slightly above average. But what stands out is the very high grade in the early part of the mine life. Also the low strip ratio and the good recoveries and the clean concentrate. Also, moreover, the strategic location with infrastructure already in place. And so, yeah, as far as grade alone goes, it's slightly above average. But there's many other facets that I think rank that add to the value of Cotabambas. Grade is obviously, well, grade can be king in the mining industry. Grade, you can't underestimate what grade means. But open pit mining is a massive endeavor, and there's many other factors that come into play in assessing the true quality of a project in addition to grade.
Yep, okay. Thanks for that. I'd like to thank everyone for tuning in. Please send in feedback. It'll go to Luke. And Luke, if you had a final closing comment on why people should pick up some stock and look forward to the next 6 to 12 months.
Yeah, well, just in closing, I'd say that the copper market is here. We've been saying, I mean, not me personally, but the sector for the last number of years, that there is a structural shortage of copper. But that structural shortage has always been some years away. Well, evidently now that that structural shortage is a lot closer than we thought. And you see that reflected in the copper price. And over this period of time where we've been talking about the shortage, the impending shortage of copper, there's been very few projects that have been identified and even fewer projects that have been advanced. And we're confident that we have one of the very few. And at a $56 million valuation, it's still a very inexpensive entry into an emerging story. Thank you.
Thank you.
Thank you.